higher. The Dow itself is up more than 1,700 points in just 1, 2, 3, 4 days. So we're going to want to pay attention to that and realize that even though this is a very bullish move that we had yesterday, that we may be stretching out here just a little bit too far, too fast. We still can't rule out that whole idea of the fear of missing out, inspiring more buyers, but we should be watching for that potential that we could see a little bit of profit taking coming into play. So let's watch this carefully up here as we continue to push on up toward additional resistance levels in the chart. We'll want to pay pretty close attention to that. I think the major resistance level that I see in the chart is all the way up here. So we still, again, could rally more here in the Dow. Keeping in mind that we've held that little bit of a higher low. We broke this resistance yesterday, broke that downtrend, and even on our technicals, ticked above the 50-day moving average. But remember, it's awesome to push above the 50-day. What's more important is, can we hold the 50-day as support? So watch that carefully. If we can pull back and hold in here, or consolidate in here and hold, that's awesome. What we don't want to see is, we don't want to see another one of those complete reversals like we had right here, where all of a sudden the bears come back in and push us back down below. So watch that carefully and closely. If we take a look at our SPY, very similar situation in the SPY. We spiked up here really strongly. Unfortunately, we just barely peaked out from underneath that downtrend resistance in the chart. We did, however, break this resistance ever so slightly, and we continue to push up into higher resistance levels in the SPY. Keeping in mind that we have this little tiny uptrend in place. So we're kind of in a wedging pattern. And what's going to be important, once again, after kind of peeking through that 50-day moving average at the close, will it be enough for us to hold that up here, or will we happen to see the bears defend this area up here and maybe push us back down? So watch that closely. A little bit of profit taking after such a big run up probably shouldn't be a major surprise, but at the same time, that crowd out there right now, that fear of missing out, and the unbelievable expectations that earnings are just going to be fantastic, kind of surprises me. I'm not saying that they're not right. It's just a surprise to me, considering the condition of the overall market. If we take a look at the QQQ had a nice move up as well. Well, doggone it. Unfortunately, if we take a look in here, we broke that downtrend. If we take a look across here, we broke that downtrend, and we continued this nice little rising uptrend. We broke through this resistance in the chart. So you're going to have to give this one up to the bulls pretty well, because they have done a good job here, and there is tremendous speculation around big tech earnings right now. So be very, very careful here. I was looking at some bear call credit spreads yesterday. I didn't actually end up getting filled on that, but I was looking at the QQQ and chose not to go there, because I think the speculation here in the NASDAQ is so high that, well, we saw it in Netflix last night. Netflix lost about 1 million subscribers. They were saying they might lose as many as 2 million subscribers. Their revenues came in below estimates, but that didn't matter. It was just a reason for the bulls to buy. And quarter over quarter on a yearly basis, big change in Netflix. But right now we don't care about that. We're just all about buying something and just really being defiant about the overall market condition. And that's okay. That can happen for a while. And can they break these resistance levels and hold support levels? That's yet to be seen. Now let's take a look at our technicals here in our chart. We broke above that 50-day moving average. So once again, we need to catch that proof that we can hold this up here, hold on to this trend, and continue that fight to the upside. So watch that carefully and closely. There certainly is that possibility developing here in the market for those bulls. If we take a look at the Russell IWM, very same situation, where we're still running those higher highs. We broke the resistance in the chart here. We push on through. And if we take a look at this downtrend, we're just barely pushing into that downtrend here in the IWM. So a little bit more maybe uncertainty here on the IWM. And if we look at our technicals, well, we still have a bullish case here that can be made, breaking through that 50-day moving average. So the question will be, if we rest or pull back, consolidate, can we hold above that 50-day moving average as earnings continue to roll out? And that's still maybe a little bit of a question here for the market. Now, as you can see here in the pre-market, we're actually seeing a little bit of a pullback on these right now. European markets were all green this morning. They have turned red with their inflation number coming in at 9.4%, a 40-year high over there in Europe. And they're continuing to deal with the worries that Russia will maintain their shutoff of energy over there. So some major concerns and European markets have reversed from green to red here this morning, and that has also played a little bit of part of moving the Dow down here just a little bit. We'll look at some other factors that may be also affecting that little bit of bearishness coming in here this morning. Let's take a look at our VIX. Now, our VIX, interestingly enough, with that huge move, a 700-point move in the Dow, and our VIX didn't change all that much. Kind of an interesting circumstance here. The VIX is acting very oddly, in my opinion. Now, we are below that 25 handle in the chart, which is a good sign. We get below that 25 handle, we start to relax a little bit on that fear. This downtrend maintains itself in place, but then the question we'll have to deal with here is, if those bears do come in, will we pop up at this level of support and then challenge that downtrend resistance again? So keep a close eye on that. If we take a look at our T2122, whoops, there we go, our T2122, you can see that we are pretty much pegged up here. We did this just one day ago, actually 2 days ago. We pegged up here at 100 on that big gap, and then by the end of the day, pulled way back, as you guys remember, and we're right back up here again. So T2122 is suggesting kind of an overextension in the short term, and that possibility that we could get a little bit of a pullback. Now, that doesn't mean we have to fall. What that means is that we could consolidate, we could have a pullback to test those 50-day moving average, we could rest, and still get that T2122 to relieve just a little bit. And remember, we've experienced this recently where we held above here for a period of time. So just like this, we can bounce around up here for a while. So this doesn't necessarily mean that we collapse all the way back down. It just means that we probably pushed things just a little bit too far, too fast, and we might need to take a breath. The bulls might need to take a little breather and get a drink of water before they can continue to push on through to the upside. So watch that closely. But it does also raise that question. Even though we can bounce around up here, it doesn't mean that we have to. If we find reason for bearishness, it also tells us that we've opened a big opening to the downside with really not much opening to the upside here for today. So watch that carefully if those bears do decide to come in. I can't say that they're going to be aggressive, but we should watch for that potential. Let's take a look at our T2107. Now, T2107, although it had an improvement here, sorry, that went to a 2-day. Although we had an improvement here, it wasn't all that impressive. Noticing that we're pressing into resistance levels here in the chart in T2107. But the good news is those bulls have stiffened up a bit. We did not make those new lows. We did on an intraday basis, but then we pulled that right back up. And we still have to recognize this overall downtrend is still in place. So we've got a lot of work before we can really say, hey, we've turned the corner here on T2107, but we have improved 90% of the stocks holding above their 200-day moving average. If we look at our T2108, well, we had a better improvement there with a big strong pop here to the upside. Tech really doing quite a job in lifting the market here. So keep an eye on this downtrend, and we have broken through this resistance level in the chart. So that's a good sign for the market. 45, almost 46% of the stocks back above their 40-day moving average. Now, you can see we've done that before where we've powered through, and then we find that resistance up here and pull back. So as we push up here, this is another one of those warnings, guys. As we push up here, we may have extended this excitement just a little bit too far too fast, and then we do run that risk of a bit of a pullback. So watch that close. And then our T2101. It was interesting yesterday. We didn't get a big volume to really push up above a 50-day moving average until right at the last few minutes of the day when we saw the dark pool activity being consolidated to the market. So you can see T2101 is perking up here, but again, I don't think we're getting the best of that indicator because if you'll notice right in here on the Dow, we're still relatively weak here on that volume. Even though we rallied really strongly, our volume still remains quite weak, and SPY, QQQ remains quite weak.